have to be honest. Tesla stock is the best stock to own right now. I'll explain why here in this video, my updated projections for 2025, and the very real recession risk that will be with us for a long time. Even despite this, Tesla is the best stock to own right now. But I do think it's one of those high beta trades where if we go into a recession, Tesla's gonna do really bad. Maybe. We'll talk about that. There is a thesis that I have around Tesla and a recession that I think you need to hear. But in the event we avoid a recession, Tesla is gonna do very, very well. And that's why I think Tesla is the best stock to own right now. I think it offers you a balanced risk profile. And I'll discuss what that means here in this video. But really, long story short, I'm gonna try to simplify this video as easy as I possibly can. First up, recession risks. This Friday, as we talked about in the last video, yes, I think Tesla can have a great September if this Friday goes well, but there is going to be a recession risk that is with us for a long time. I think James Bullard and Ed Yardeni and so many other influential people in the investment community that have really declared victory on inflation and a soft landing. They're speaking out of their ass. Let's be honest about this. We will not know if we have actually achieved a soft landing until the federal funds rate is substantially lower. Like, based on the last summary of economic projections that we got, we're not going to be at neutral at least until 2026. So how can you even start to say that we've achieved a soft landing with the federal funds rate as restrictive as it is? And you want to consider the lagged effects of raising rates, but not the lagged effect on actually cutting rates. Theoretically, if there's a lag effect in raising rates, there's also a lagged effect in that boosting the economy when you cut rates. So how are you going to call this a soft landing right now? Like, that doesn't make any sense to me. That sounds like arrogant investing. That sounds like everyone knows that, hey, we don't know if we're in a soft landing yet, but we're still gonna say it because it sounds good. I don't know what kind of audience they think they're talking to, if retail investors actually buy that or not, but it's not true. So yes, recession risk is going to be with us for a long time, and each and every single non-farm payrolls report, retail sales, durable goods orders, consumer spending data point is going to be highly critiqued by investors and by markets. And a lot of how investors feel about markets will be determined on the trajectory of the collective data. What I mean by this, if we continue to get data where some is good, like GDP, for an example, that just came out last week that was revised up to 3%. Great. But then when you have durable goods orders that just came in at the largest decline we have seen in almost a decade, at negative 6.6%, sure, it did recover a little bit. But if we continue to get that mixed data, there's not going to be a consensus on Wall Street in either direction. And I think that's why markets generally have been pinned at, yes, higher levels, but pinned. We're not breaking out here, although Friday looks like we're starting a breakout. It's really not moving because it's all about the trajectory. And I don't think we're really going to get a clear, concise trajectory of this economy until we, one, achieve a soft landing or go into recession, which is a pretty far distance away in time. I mean, we're talking at least the end of 2025 at bare minimum before it even sounds logical to declare a soft landing. Like, the economy moves very slow. It's like the train that you hear in your dreams that just goes very, very, very slow. Or like getting into a fight in your dreams. Okay, you don't know how you got there. You don't know why you're fighting in your dreams, but you're super slow. You're in like slow motion and you can't do anything. And that's kind of what how the economy is. It's just very, very slow. And I do have my concerns that the economy is eventually going to head into a recession. I like to look at different things. Let's call it for what it is. Warren Buffett just sold a chunk of his portfolio, like 30% of his entire portfolio in the last quarter. Like, they are sitting on by far the most cash they have ever sat on as a ratio or percentage of their portfolio value. Like, it's scary what Warren Buffett is essentially seeing out for the economy. Okay, if there's anyone that you should take a cue from, it's probably Warren Buffett. But beyond that, just simple principles of macroeconomics would say every time there is a boom, there is a bust. The bigger the boom, the bigger the bust. Now, things change, economies evolve. So yes, we had a big boom. We don't necessarily need to see a big bust. We don't need to see a depression or a deep recession. But to sit here and say things are going to be fine as the consumer is drowning is asinine to me. That's hard to imagine a scenario where at some point there's no recession fears at the bare minimum. Even if we technically avoid a recession, there's going to be a quarter or two with negative GDP. And Wall Street's not going to like that, and stocks are going to sell off big time. So if you're an equity investor, it really doesn't matter what the economy does. Let's be honest. Economy, recession, no recession, you're probably going to buy stocks. You really care about what markets are going to do. And whether or not we go into a recession, it's all about the recession fears. Think about 2022. Everyone thought we were going into a recession. The Fed was raising rates. We were doomed for a recession. Stocks fell over 30% from top to bottom. And we never had a official recession. So from that perspective, I think a lot of influential people in the finance community right now are speaking out of their ass. Let's just be honest. And yes, I have my concerns about a recession that will not go away anytime soon. But I do think Tesla stock is probably the best stock you could own right now. Because if I am wrong, if macroeconomics basics 101 that says for every boom there's a bust does not come true, let's envision a perfect world here where we had this big boom, we cooled down for a while, and then we boom again. There's no recession, there's no panic, there's no fear. Tesla stock is going to massively outperform as the Fed lowers rates on a fundamental basis, on a tactical technician basis, and on a logical basis. Let's not also forget AI is going to be here to stay. And I think right now we're in phase 1 of the GPUs. These are the enablers of AI. I've talked about this before a couple of weeks ago, a couple of months ago. I've talked about this concept periodically here on the channel. We're in the enabler phase right now. We're not in the actual applicable stage yet, where the attention is going to switch from the GPU providers, the enablers, to the appliers of real world AI and just simple money, I guess, Econ 101. The bigger the problem, the more you're rewarded. So if you've studied anyone that's ever been super successful, if you study Warren Buffett, Elon, Mark Zuckerberg, or Bill Gates, Jeff Bezos, any of these individuals, just think about this logically. Each and every single one of them solved multi-billion-dollar problems. Okay, whether it was Mark Zuckerberg with the communication problem, okay? You're able to stay in touch with your family. Jeff Bezos has saved a lot of people a lot of time by just ordering online. Elon Musk is, obviously doing his own part, trying to save the planet, making very cool, products. And for SpaceX, solving the internet problem and many other things, right? So Basic Money 101 says the bigger problem you solve, the more you are rewarded for it. And there is no bigger problem to solve than full self-driving. That is not in the medical field. In the medical field, there's way bigger problems to solve than full self-driving. Okay, like the C word. I don't like saying it. But the C word in the medical field is bigger than full self-driving. Other than that, there's nothing from at least, right now. Obviously, a new technology will evolve and that may be bigger than FSD at some point in the future, or maybe in our lifetimes. But right now, I should say bots, Optimus, robots, that obviously could be bigger. But I think FSD is going to be here first. So from that perspective, I think the markets will start to apply a much larger multiple. The markets will say the market for FSD, for robotaxis, for fully self-driving vehicles is so large that there's not really a limit to the valuation of Tesla in the near term. Now, in that kind of environment, you need rates to go lower. You need the economy to be doing okay. And if I am wrong, if we don't go into a recession, I think Tesla's the best stock to own, right? For the second wave of AI hype, which is going to be the appliers of AI, not the GPU providers. NVIDIA is still going to do well. These players are still going to do well that are your AI stocks today. But the attention will shift. And I think a big beneficiary of that, the biggest of all, will be Tesla. And this could potentially start by the end of this year, by 2025, maybe even October, if we get guidance on the robotaxi event. And that's why I said in the last video, I think Tesla stock could be a $300 stock. Or at least when we get that guidance for when to expect the first robotaxi rides. Now, when we take a look at Tesla's 2024 EPS estimates, they've actually went up for full year EPS by the end of this year, from 1 month ago being at $2.25 to now being at $3.22. Great. I mean, that's really not what Wall Street cares about now. It's about 2025. Estimates are currently $4.43. Tesla's strategy right now is buying down the interest rate. So the best way to think about this is simple. Let's use simple math here. If, let's say, the rate to finance a vehicle is 5%. I know it's more like 6%, 6.25% or so, but let's say 5% for simple math's sake. The actual number doesn't matter too much here. But Tesla's offering 2% loans. That means Tesla's buying down 3% of the interest rate. Just like if you buy down the rate on a house, for an example. You can buy points on a home, and yes, it's more upfront cost, but you buy down the interest rate and your monthly cost is lower. Your monthly mortgage cost is lower. Tesla's doing the same thing with each car they sell. So just for simple math's sake, it doesn't exactly work like this, but pretty close. Let's say if the Fed cuts rates September 18th by 25 basis points, let's say the financing cost goes to 4.75%. Let's say they cut rates again November 6th and it goes to 4.5%. Let's say they cut rates again in December as the markets are pricing in and it goes to 4.25%. Now Tesla is only buying down 2.25% of the interest rate. That in and of itself will boost Tesla's profitability. And I think that can be an upside surprise in 2025. Now, also, as I said earlier in this video, I think the growth potential of robotaxi and FSD and the profitability that could be generated there, the problem at scale that Tesla is trying to solve is just so massive. It's hard to put a value on Tesla in real time as rates start to fall. And especially as we get like deeper into 2025, like midpoint 2025, and we got 1.5% of rate cuts in the bag, this is where things can get quite crazy for Tesla's, valuation. Because, I mean, how do you value a company that's solving problems the size and scale that Tesla is solving? It becomes very difficult. But if you say we have 2025 EPS at $5 per share, what's an appropriate multiple on that? You could say 200 times earnings if Tesla guides for FSD, really robotaxi rides to start by midpoint 2025. You could look at Tesla at $1,000 stock. Now, this would obviously be in the scenario we avoid a recession. This is in the scenario that I am wrong, so it's not exactly my base case scenario, but it could be very plausible. I think even more conservative, like way more conservative, is Tesla a $500 stock next year. $5 of EPS times 100 times multiple. Like that's pretty easy to get to. That's not far-fetched at all by any stretch of the imagination. Now, again, that's more of the better case scenario. If we actually avoid a recession, you're going to be looking at Tesla anywhere from $500 to $1,000 per share by the end of next year, because by then 2026 EPS, that's what we're going to be focusing on, and that should come in the ballpark of $6.50 to $7.50, and then theoretically the multiple really shouldn't fall too much, because by that point we're going to be just licking the surface of Tesla's potential in robotaxis, hopefully launching robotaxis in China. That would be great. But also Optimus, like when you try to factor that in, good luck. Okay, you could be looking at Tesla $750 stock to double that, $1,500 stock by 2026 or late 2025. Like there's really no limit on Tesla. And again, that's why I think in the scenario I am wrong. Tesla offers you that alpha. Okay, so you have beta, beta and alpha. Beta is what basically tracks the S&P. So if you're a hedge fund, you want to at least track the S&P so you don't underperform, but then you want to take more risky bets and things with more alpha that could 5 to 10x if things go well. Okay, that's your alpha return. Your beta is your beta. I think Tesla can be a huge alpha stock in 2025 if we avoid a recession. And if I'm wrong, like let's be honest, this is going against what I think will actually happen. But I am not too far, over myself to realize that I could be wrong. And that's why I like Tesla from that perspective. Now, if I am correct and Tesla, well, I shouldn't say Tesla, if we go into recession, if the US economy goes into recession or at least gets a scare of a recession, which is my forecast, I think Tesla can still do well in that environment. I think in this next recession, if we get one, it's probably going to be a lot of lower income earners. Let's be honest. The oversupply of lower income workers. I think a lot of the firing that we've seen over the past couple of years is in software engineers. It's in a lot of white collar jobs, not a lot of blue collar jobs, not a lot of construction, not a lot of lower income jobs. And unfortunately, I think that's the area that's going to be on the chopping block for job losses in this recession, in which lower income customers, they're not the ones, or consumers, they're not the ones that typically buy a Tesla anyways. And in that environment, rates are going to be probably zero, if not close to zero. And the people that can actually afford to get a Tesla in the first place, they're going to be able to get a Tesla. It's going to be a lot easier from a financing perspective to actually buy a Tesla. So from that perspective, I mean, even if we go into a recession, I think Tesla can still do well from a car company perspective. I think AI is not going anywhere. I think stationary batteries are not going anywhere. And I think either way, we're going to see a lot of improvement on FSD and the launch of the robotaxi network in 2025, whether or not we go into a recession anyways. So I think from that perspective, for good or for bad, Tesla offers a very attractive opportunity for whatever direction the economy takes next. But yes, I want to be very clear. If we do go into a recession or get this recession fear, this recession scare, Tesla will fall quite a bit from here. Like, the markets will be irrational for a period in time. And that is your wealth creating opportunity. That is your moment to see through the bullshit. I hope that happens. So in a more recessionary environment for Tesla, I still see Tesla putting up around $5 of EPS next year, but with a lower multiple. Okay, I think the multiple probably stays pretty stable where it is today at about 80 times. That still brings you to a $400 stock. Now, clearly that's when the dust settles, the fear settles out, and a $400 stock sounds nice. You can get more conservative with this. Say $5 per share of EPS times a 65 times multiple. That's $325 per share. That's still a lot higher than we sit today at $214 per share. That's why I think Tesla offers a pretty attractive risk to reward, really, for either way this economy goes. So let me know what you think about this information down below in the comment section. I would love your perspective on this. hopefully you learned something. Hopefully you gained a greater perspective. From me, like, you know, I don't think things are going to be rosy for the economy. For a period in time, there will be some fear, there will be some panic. Wall Street will have its freak out moment. And even in that, I can acknowledge, like, hey, I could be wrong. And if I'm wrong, that's great, because you're going to do even better. But if I'm right, you're still going to do good. And that's why I like Tesla stock in this environment. So hopefully you gain, again, some perspective. Hit the like button, subscribe to the channel, enjoy your extended weekend. Markets are closed on Monday. And I will see you in the next one.